future, talk radio will actually educate, inspire, and make you think. The future is now. Topics and music that affect your life from Universal Broadcasting Network. Tune in at ubnradio.com.
We're not gonna take it. No, we ain't gonna take it. We're not gonna take it anymore. We're not gonna take it. No, we ain't gonna take it. We're not gonna take it anymore. Just you try and make us.
Hey there, everyone, and good evening, America. Listen, I know a lot of you are watching the World Series, so we're going to repeat this show on November 23rd. So if you're listening on the 23rd, it was recorded the night of the World Series, just so you know that. This is your host, Alan Lissauer from Financial Sanity Now, and I have with me a special guest, Frank Ilderim, who's been a real estate broker for over 20 years. He specializes in short sales, but he does every kind of sale, and he's great at what he does. We're going to talk to him a little bit later, okay? Remember, everyone out there listening, this is not my show. This is not Frank's show. This is your show. Let me say this again. This is your show. Finally, a place for you to complain, to be concerned, to get off your chest all the consumer problems. You know, we have no interest in politics. We don't care if you're a Democrat, a Republican, a socialist, a libertarian. What we care about is what are your problems? What are the consumer complaints? We want to hear you get angry. We want to hear what makes you upset.
We know things are bad, worse than bad. They're crazy. It's like everything everywhere is going crazy, so we don't go out anymore. We sit in the house, and slowly the world we're living in is getting smaller, and all we say is, please, at least leave us alone in our living rooms. Let me have my toaster and my TV and my steel-belted radios, and I won't say anything. Just leave us alone. Well, I'm not going to leave you alone. I want you to get mad.
And we want you to get mad, and we want you to call in at 323-524-2599 with questions and complaints. We want you to text at 310-384-4352. We want to hear from you. Now, our three topics tonight are loan modifications. What the heck is that about? Mortgage modifications is a process whereby the terms of the original mortgage note that you signed, if you actually read it, and most people don't, are changed so that it lessens your monthly payments. This is not a refinance. This is a way to change the terms with the bank. Okay? Now, are you someone who could benefit from lower monthly payments? Then you need to listen, to take notes, because we're about to break it down so that you can catch some information to help you. Okay? Remember, you can always find this on YouTube, on iTunes podcast, and on the UBN Facebook page. The second topic is going to be short sales. And, you know, I kind of have a joke with this. You know, you don't have to be short to sell your house. That's not what a short sale is, okay? A short sale is when you sell you owe the bank more than it's worth. Now, a lot of people take out second mortgages, and they have a first mortgage, and their homes, although they've gone up in some cases, they're not where they're supposed to be. And in this case, we need to get the banks to let you have a short sale. In other words, sell it for less than you owe the bank. We're going to go into the advantages of this. The disadvantages, or whether there are any. I don't think there are too many when you're in that position. And Frank will go through the processes and the consequences with you. The third topic is credit card addiction. Yes, it's an addiction. How many of you out there have credit cards totaling $10,000, $20,000, $30,000 and are paying 20% interest? If you do, you are addicted. Remember, when you're using your cards, is this something you need or something you want? Well, most people just do what they want. But we will try to get you to do what you need to do. There are times credit cards are good, okay? But since there's $1.6 trillion now in credit card debt, I'm guessing at least half of that is stuff you didn't really need. So we're going to get into how did you get addicted? How can you get out of your addiction? How do you make a change? Tonight, I want you to call in and talk about this topic. Call-in number is 323-524-2599 or text 310. Okay, we have a call. I'll just say 310-384-4352. Hello, caller. What? They hung up. They called and hung up. Well, maybe they'll call back. So I'm going to go on. I said the first topic is going to be loan modifications. So the question is, what is it? Okay, but before we go into what it is, when did it become necessary? And how did it become necessary? Well, if you're in California, you remember the bank called Washington Mutual and Wachovia and Countrywide. Actually, they were across the country. There was a way of getting loans for homes that went like this. You walked into a loan broker. Frank, you may remember these times. And they said to you, do you have a pulse? And if you had a pulse and you declared a certain income, they'd give you a house. Now, why would they do such a silly thing? I mean, here they are giving you a loan for $500,000 based on nothing. Well, I'm going to explain why they did it. There was a lot of money floating around at the time. What they did is they sold loans to people. These people got homes, took out loans. The banks had the regulations changed in 1998. So what happened is they could take that loan, package it with another $100 or $200 million worth of loans, put it into what's called a secure. Am I going too fast for people? I hope not, but just get the idea. They take that and they put it into a bond, a securitized bond. Now they take that and Standard & Poor's comes along and rates that paper AAA. Was it AAA? I don't think so, because look at this. When you don't check people's income, you don't really know what the default rate will be on the paper. So this kept on happening. Let's say Frank was the government of Iceland. They have all these loans. They say, I'm going to give this to you at a discount. There's $200 million. Give me $170 million. You just collect on these and you'll make all this money. And they were able to sell loans. In fact, Iceland went bankrupt. They were able to sell it to German banks, to English banks. Remember, this was a worldwide event that occurred. What happened is they didn't count on the defaults. So when you had, I've dealt with clients who had 3 homes, and I hate to say it, the guy was a gardener. He wasn't making that much. He was doing okay, but he wasn't making enough to have 3 homes. So as the default started, okay, there's a caller on this. Yes. Hello, caller. Hello. Is there a caller here? Can't hear. Hello? Hello, hello? Caller? Do you hear anyone there? Okay. Maybe the phones aren't working right. That's 2 calls we didn't get. It's 2 people aren't watching the World Series. That's probably the only 2. Okay. So where I'm going with this is the banks were really greedy. They were not regulated at all. So they took all these notes and packaged them up and kept reselling it. Now, if someone then gave me $170 million, I can re-lend that money out. And I can do it again and again and again. And this happened, I'd say, pretty much between, what do you think it was, from about 2000 to 2007 that went on?
Yeah, that's about right.
Around there. And there were billions of dollars. So the default rate started to happen. And as the default rate increased, the people holding this paper got scared and nervous and went to the government and said, this whole banking system is collapsing. The banking system did collapse. I'm not sure how many of you out there understand that the banking system collapsed. The government came along and fed I'm going to say, $6 to $7 trillion into this economy. That's what brought it back. It wasn't a politician. It was the Federal Reserve pumped money after money into this economy to make it work. So I just want you to know that at that point, it was necessary to try to help out homeowners. It was a necessary thing to do. Okay, there's a caller again. Maybe the same one. I don't know. Yes, caller.
Alan,
Yes.
this is Chuck Schwartz. I'm calling to listen to the program, and when I had it muted so it wouldn't disturb you, and when it hung up on me right after, I did it 2 or 3 times.
Yes.
So is it possible that I can just listen to the program?
Yes, you can go on. Are you listening on UBN radio on your computer?
I'm on my phone.
Yeah, just go to UBN. Do it through your browser, and go to channel 1, and you should be able to listen to the show.
Perfect. Thank you
I
very much.
appreciate you calling, Chuck. You were telling me earlier that you're involved in credit repair.
That is correct.
That is okay. Well, maybe you can call. Well, next week we're going to have a segment on credit repair. Maybe we can have you as a guest.
That'd be fine. I would love to do that.
Okay. Thank you again for calling.
Meanwhile,
Yes.
I'll log into ubnradio.com, channel 1. I'll listen to the program,
Okay.
and then we can talk either later today or tomorrow.
Or you can always catch us on YouTube. We have a YouTube channel. That's where it goes after this. All right.
Okay.
We'll talk to you soon.
All right.
Thank you, Chuck.
Thank you very much.
Okay. Great. So does everyone? Sorry, we got lost there a little bit. So you have the banks going bankrupt. Okay, there, right here. Got it. Okay. Sometimes I look around. The banks are going bankrupt, and part of money is now being allocated to help homeowners because people are going underwater. What that meant literally, if anyone owned a home in 2007, by 2009, most homes were not worth what you owed on them. And homeowners were struggling. They had interest-only loans. They had real problems with making payments. You know, everyone remember the economy? We forget so quickly how these things happen. The economy stunk. Unemployment was high. Frank, you probably went through this yourself during that time as a broker.
Of course.
Yeah.
Income went down 95%.
95%.
Everything crashed.
Yeah, from $1 million, that's still, he
no.
was doing okay. But no, we're kidding. No, it did. It went down. You couldn't,
Yeah.
you could barely sell anything.
Mm-hmm.
I know that's the time you started to get into short sales, but we'll go there in a few minutes. So loan modifications became possible. Well, you would think that they would have been mandated. In other words, mandated to either do principal reduction or to give people low interest rates to make more affordable payments. But they weren't. They weren't mandated. There were programs offered. To get these programs, and they still are being offered, by the way, under certain circumstances. But to get these, you had to go through specific programs. We jump through a lot of hoops. Some of the types of modifications were HAMP, standard, and there was also HARP, which was a refinance through Freddie or Fannie. Now, Freddie, I'm going to just give you a definition of terms here. Freddie Mac and Fannie were quasi-government private lenders who backed up loans. So when you get a loan from Bank of America or Countrywide, they don't keep that loan. They get rid of it. And the government was the biggest backer of loans with Fannie and Freddie. So they had their own type of modification. And although they received billions of dollars, honestly, they were very nasty about who they would give this to and who they wouldn't. There were securitized loans that had to be done through the investor. Modifications had to be done through the investor. So what we have is a hodgepodge system. And when you have a hodgepodge system that no one quite understands, you have to hire experts. Now, we are probably the only company that actually did this and still survived because we did it honestly and we succeeded where most people failed. It's a very complex process to go through. You have to have a hardship. In those cases, the hardship was most people's homes were underwater and they weren't making enough money. But you also have to have certain income requirements. I equate this to the Three Little Pigs. I don't know if everyone knows this. No, it's actually the Three Bears. The porridge has to be just right. Has to be just right. If you make too much or too little, go sell your house. Too much, no, you don't qualify. But even if, and it was considered on gross, and most people don't live on gross. You have to pay your taxes. So it's on gross, and you have to have a certain debt-to-income ratio. And again, for the average person, this was almost impossible to figure out. But a lot of them were done. I know we saved almost 1,700 homes, and it's something we are proud of. People were losing their homes at quite a fast rate. So the home affordable modification, HAMP, is gone, by the way. It's gone. That was a 2%. You'd get 2% for 5 years. It's over. It's been withdrawn from the government. Standard modifications are still possible, but they must come with a good reason and perfect income. Now, a lot of my clients, a lot of people who want these are self-employed. Self-employed people can get a modification. We can use profit and loss statements. We can use the amount of money going through your accounts, as long as it's all on the up and up. And we find that most of our clients are that way. The banks were supposed to follow certain guidelines, and they were
Lissauer has
monitored.
helped hundreds of homeowners save their homes, reduce their credit card debt.
Well, that was nice. I don't know where that came from. So, let me wrap this up by telling you, modifications are possible. They can be done. You do need an expert to do it. Most people who go into the bank and try to do it on their own will fail, and then you've given the bank all the information about you, and it's very hard to change. So if you say I'm making $60,000 and I've been a great customer, banks don't care. It has to fit the formula, and they don't care how long you've been a customer. I know everyone wants to say, I've been a great customer. I hear this all the time. I've been with Wells Fargo for 20 years. I always paid my bills. Why won't they modify my house? Because they won't. They won't. It's not in their interest. Now, if it's done properly and it meets both investor and bank requirements, they'll probably get it done. Okay, so I know there's going to be a lot of questions. If you don't have time to call in tonight, or if you're watching the World Series and you're seeing this on a replay, just go to www.financialsanitynow.com or call our office number at 818-906-2385. But if you're listening to the show, you can also text us now at 310-384-4352. So I'm going to go into short sales now because I don't want to keep our guest waiting too long. He's been very patient. I really appreciate that. And we're going to go into what that's all about. Yeah. Okay. Click.
There whenever I
They're
needed
crazy.
him.
It's like
If I had a
everything
place to
everywhere is
call,
going
he called me
crazy,
back,
so
or
we
he took
don't
the
go out
call
anymore.
Immediately, I
We
had his
sit
cell
in a
phone
house,
number.
and slowly the
people
world we're
who-
living in is getting smaller, and all we say is, please, at least leave us alone in our living rooms. Let me have my toaster and my TV and my steel-belted radios, and I won't say anything. Just leave us alone. Well, I'm not going to leave you alone. I want you to get mad.
And we want you to get mad. We want you to take some action in your lives. Don't just sit there. I mean, if you get a DWP bill, that's outrageous. You want you to get on this show and complain. I know Ron Galperin, the controller in Los Angeles. There's the PUC, Public Utilities Commission. There are places to go. But if everyone just sits there, I'm going to tell you a quick story. I'm sorry, Frank, just before we go any further. I have an Amazon card, and I have an Amazon Prime account. And I noticed I'm being charged for HBO and Showtime. Now, I get that already through Dish. I have so many miscellaneous bills. And they're charging me $49. So I called them up. I said, how did you possibly charge me for this? This is Amazon. We're supposed to trust these people, right? And the $49, I said, oh, you subscribed? I said, no, I didn't. So I went through a bunch of calls. I think it was like 50 minutes. I finally got them to withdraw it. How many people and how many times are you out there getting charged for something you didn't use? Whether a subscription, an automatic deduction, and we want to hear from you. Because I think it's time that this type of business practice stopped. Now, sorry for that diversion, but it goes to being upset with the way things are. And if you're upset, it's, don't just get mad, get even. Okay? That's from the Marines. But let's talk to Frank. Now, Frank, besides being a short seller, is a broker. He's a
Correct.
full-time broker. His license number is 012-19638, and his broker's number is 018-21033. And he's done this for over 20 years, and primarily in the Los Angeles area, although he goes out to Riverside or San Diego, Ventura. I know you've done some work in Ventura.
I'm licensed in California, so
yeah,
I
but
can do
he doesn't usually travel
anywhere
to
in
San
California.
Francisco, but he goes around.
Yes.
And
Yes.
he knows the markets for sure. So there's some questions that have come about for short sales, and I want to ask Frank, even though you're a regular broker, I've spoken to some people about short sales. We've run into clients who need them. They say, well, my friend's a broker. So is there something about short selling that you have to know that a regular seller doesn't? A regular broker?
Well,
I mean, what's the process that...
really, to be honest, if you have a real estate license, you can do a short sale.
You're allowed to.
Yeah, you're allowed to do it.
Right.
You don't need a special license as a salesperson or broker to do a short sale. But the difference is experience. I pretty much started doing short sales right when everything went crazy, 2007, 2008. And even those first couple of years, the banks really were not even cooperating to do the short sales.
Yeah.
So I've had a good deal of experience between Wells Fargo, Bank of America, Chase, and then some of the servicers.
Well, let me ask you. So you are making a sale, you sell it, the person gets financing, it's a sale. It's you don't have to. You're negotiating for your client to get them the best price, but aside from that, it's not a lot of negotiation, right?
A standard sale,
Standard sale.
it isn't. The only negotiation really is between seller and buyer.
Okay.
But in a short sale, there's several entities. It's the buyer, it's the seller, it's the lender, the investor. A lot of the time, short sales, the properties have numerous liens. They have HOA liens, they can have IRS liens,
Right.
franchise tax board liens. So you need to be very knowledgeable in the procedures of all these entities to really negotiate with everyone, make everyone happy to do the short sale.
So what I'm getting is you're a negotiator. You and that's where all the experience
Somewhat,
comes
yeah.
in.
I guess somewhat I am.
Because
Yes.
you have to you have to convince the bank to let go of this at a lower low. So if someone owes $650,000 and you say, look, all I can get you is $550, why does the bank agree to that?
Well, a lot of the time, first of all, the homeowner does have to qualify for a short sale.
How does that work?
The banks will ask for their documentation, tax returns, bank statements, pay stubs, W-2s. Often, if the homeowner is behind in the payment, they naturally have issues qualifying. And sometimes they've tried loan modifications
Right.
don't work.
I know that.
So it falls in my lap as a possible short sale. So the banks, I'd like to say they're nice guys and they want to help out, but really for them it comes as a business decision. it's a non-performing asset. They're not making any money out of it. It's sitting in their inventory. So it behooves them to work with the homeowner and do a possible short sale.
So I'm just trying to make logic for people out there. So if they're not behind, it's really probably not going to be a short sale. I know with modifications that happens.
Well, you don't have to be behind in a payment necessarily to do a short sale. I have done short sales where the homeowner actually was paying the bank.
Okay.
But if they can show a genuine hardship that they won't be able to pay possibly in the near future, then the bank will make a decision and say, okay, we'll do the short sale. Let's do it.
So there's a whole bunch of issues that come up in my mind. One is, here I'm falling behind. But I don't know that, I make six figures, say. I'm just giving you an example. I make six figures. I have two children. I have kids in school. By the time taxes are done, I'm still having a hard time. Is that what I have to prove to the bank? Or do they have, say, oh, no, you're making enough. You gotta, well, what are they going to do? I mean, they foreclose? What happens?
Well, you just said it perfectly. You have to explain to the bank that I won't be able to make the payments, and this is why I'm behind. But I would say probably almost 100% of the short sales that I do get, the homeowner is behind in payments. It's rare that someone is paying on time and it's a short sale, but it does happen too. It happens often on investment properties where maybe the tenant moves out or you get a difficult tenant that's not paying the rent, then it's hard for the homeowner to pay the mortgage on that investment property, right? Because the tenant is not paying, and especially in California, that tenants can really give landlords a problem.
Can they?
So
I've been
drags it out, and
right.
then the homeowner can't in the foreseeable future make the payment possibly.
That's terrible. Now, you talked about liens and encumbrances on the property. So if the IRS, and I know of a person like this, has an IRS lien against the property, and they're trying to do a short sale, now that lien is how does that work? How do you get rid of it, or do you have to pay it, or what happens to
you
that
can't
lien?
get rid of the IRS or
I don't think
franchise
you
tax
can.
board liens,
No.
but it's almost the same way with the IRS as it is with the lender. You present them a short sale package, so to speak, and they will remove the lien from that property, only from that property, not the whole lien.
Right.
And they'll allow the homeowner to sell it. But again, with them, you have to qualify too. They have their procedure too. They want to see an appraisal. They want to see copies of the lien. They want to see the preliminary title report. So there's a procedure with that also. So I want homeowners to know that if they want to sell the property, that's a short sale. Even if you have all these liens, it's still possible to do it. You just have to settle and negotiate with whatever was on there.
Well, what if you don't have the money to settle these out? What happens then?
Well,
but the bank will take money. The bank says it's $650. They'll take $550, and all you can get is $550. The IRS, none of these people get anything.
well, in that situation, yes, the IRS won't get anything. But a lot of the
Will they remove the lien?
if the property qualifies and you qualify, yeah, they'll move it from that property so you can sell it. There's other lien holders too to consider. For example, I find if a homeowner is behind in the payments to the lender, a lot of the time they're behind with the HOA too.
Yeah,
So then you have to go in and settle with the HOA.
they're mean.
Yeah, they're mean. The HOAs will want money. They won't, actually, I can say this. They won't be as nice as the IRS.
Okay. Oh wow. So someone's nicer than worse than the IRS. Okay, that's good to know.
Yeah.
So, but you got to deal with all these liens, and this is something most brokers or sales or realtors don't do, because you've got to go through that whole process. Now,
It is hard.
It sounds
to do.
complex.
You have to be patient.
And why would you do this instead of just making a sale? It seems like the sale's easier.
Well, I mean, I can do sales too. I have a broker license to do that, but it's a short sale is challenging, and I do enjoy doing it, and I do like to help the homeowner, because the homeowner does get helped out, because in many situations they get extra time in the property. If they're behind and there's an upcoming foreclosure sale date, sometimes the lenders will work with you on it. They may even possibly extend the sale. They may give you several months.
So they'll let you stay there while you're making the sale.
Exactly. While you're working the short sale and working on it, it's possible that they'll...
That's an advantage for the homeowner.
That's an advantage. I'd say another advantage is some lenders do give relocation money.
Oh, okay.
Yes.
That's good.
They do.
That's
they used to
helpful.
give better relocation money when this program HAFA was around.
Right. I know that's over.
It's over, unfortunately, but they still do give relocation money in many situations. So there's that benefit. But what I think is a benefit that the homeowner gets is they really get the control. You know, they think they don't. And so I have to often explain to my clients, say, well, if maybe the bank is deciding if they do the short sale. That's true. But you still are in control, because you have to sign the purchase contract. You have to sign the grant deed, selling it to the buyer. It's up to you if you want to sell it. It's not up to the bank if they sell it. The bank is only saying, yes, we'll do it, no, we won't. But
So they're saying they will or they won't, but the truth is also that if they don't sign it, the bank can go ahead and just foreclose on them, right?
Yes, if the bank doesn't agree to the short sale.
I mean, if the owner goes, oh, no, I don't want to short sell it, it's at the end of the road, the bank can say, okay, fine.
I mean, sure.
You're gone.
Yeah, the homeowner can do that too. But again, I see more positives in doing a short sale for the homeowner than just letting it go. I mean, there's lots of benefits we haven't even discussed. For example, your credit looks a little bit better when you do a short sale.
I want to discuss that with
Yeah.
you. Because I know if there's a foreclosure, how many years is it before you can even get a loan? How many years if there's a foreclosure? It's a long time, right?
It depends on the lender. And
what is Fannie and Freddie guideline on foreclosure?
I believe it's 3 years.
3 years?
Well, not for foreclosure, for short sale.
Short sale.
Yes, I
Right.
believe it's 3 years.
But a foreclosure is...
Foreclosure is more difficult in most cases to get a loan. I'm not a lender, so I'm not the expert on that part of it. But just talking with different lenders, that's the...
I've spoken with some lenders, and they said what you said, 2 or 3 years on a short sale, but a foreclosure... I mean, I know things are tough to get refinances or to get home loans. So I'm not even sure you can get a loan with a foreclosure. That's how difficult it is.
It's difficult. I mean, if a person is willing to pay for it, you probably can get a loan. I suppose if you have
put enough down,
a big down payment, you can go to a hard money lender. I mean, they'll give a horrible interest rate in more cases. But
we don't need that.
But if you're going to go to the conventional lenders, and this is the thing of it, if you short sell a home, the wonderful thing about it is,
it's a sale.
It's sale. On your credit, it says, I believe, settled for less, which still looks better than a foreclosure.
At least it's sold.
But it's not the end of the story. I mean, a few years go by, if you're still making money, you reestablish yourself, you can qualify again and purchase a home. It's not
so that's
the end of the world.
One advantage, and I think this is a very big advantage everyone has to know, is that a short sale protects your credit way above a foreclosure. A foreclosure is really something you want to avoid. And one way to avoid it, you try a modification. If that doesn't work, you do a short sale. And that's the route to go. So everyone should know these are the steps. Because otherwise you're ruining your credit. You're not getting any moving money. You're getting thrown out of your house. It's just not a good feeling. So like Frank said, you are in control. Control is very important. But there's some other issues here, Frank. You said the homeowner needs to cooperate, and I get that. And you talked about the process a little bit, and the benefits. Let's go over the benefits one more time, just so everyone out there knows. And then I would like you to answer, why do lenders agree to a short sale? Okay, I would just want you to do that. I am going to take an emergency call. I'll be right back. So answer that. Okay?
Sure. Okay. Well, the benefits, once again, just to touch base on it, is if you have a foreclosure date, if the lender is working with you on the short sale, more often than not, they'll extend that sale while you're doing the short sale. They don't guarantee it, but if they're working with you, more often than not, they do so. So you get, quite simply, extra time in the home while the process is taking. And short sales, actually, I didn't touch base on this, they're usually not a fast process. They're not like a standard sale where someone writes an offer, it's a 30-day or 45-day escrow, and you're closed. Most lenders do take anywhere from 60 to 120 days on a short sale. I've seen them take even longer than 120 days, to be quite frankly. So the homeowner does get the time if something like that transpires. And then you open up a 30 or 45-day escrow. Again, additional time. So that's one of the benefits. You do get, as I mentioned earlier, the relocation money in some cases. So that's a plus. And also, your credit does look better than foreclosure in many situations. So I'd say those are the main
And I'm back.
main benefits. I would say.
Thank you, Frank. I'm back.
Sure.
No score yet on the game. I think it just started for anyone who's listening. That was not the president, just so you all know. So I want to give Frank's phone number. I want this to go. Again, you can see this again on YouTube, Apple, iPods, whatever that is. Frank, can you give us your phone number?
Sure. I give you my mobile number, which is 818-968-5361.
Okay, that sounds like there's a caller. Hello, caller.
Hello.
Hi, caller.
Hello.
Hey, hi. Can you
Hi.
can you hear me?
Yes, I can hear you.
Oh, tell me. Can I ask? Do you have a question for us at Financial
Yes, I
Sanity?
do.
All right. What is that? And what's your name first?
My name is Jean. I
okay.
want to
Hello.
ask
Jean.
Frank.
Hi.
I bought my home in 2010, and the past 3 years I fell behind my payments, and I keep getting bombarded with banks, the two loans that I have, that they will foreclose my home. And I spoke to different people about short sales, and I'm kind of in between. I don't know what to do. Should I get a loan mod? Should I short sell my home? I don't want. I listened to what Frank said. It will affect my credit. I don't want to have my credit ruined. So what can I do? What's your suggestion?
First of all, when you do get this process over with, come back to us, because we do credit repair, and hopefully we can remove a lot of the bad credit, the lates you've been having. Yes, you don't want to do a foreclosure. We can try a modification. What is your house worth? Do you? I'm getting feedback here. Do you owe more than it's worth?
Right now, I'm sorry?
Do you owe more than it's worth? How much
Yes.
do you owe?
I owe $600.
And what do you think the house is worth?
Well, last time someone checked, it was $400, I believe.
Okay. So I think a short sale would be in your best interest. Frank, what do you think?
Well, if you're upside down like that, Gene, that's
Yeah,
basically
modification
sounds
would
like
help a lot.
that sounds like a short sale. I mean, I suppose you could still modify it. It's up to you, but
we can't get principal reduction anymore. So, I don't know. It's really not going to be a functioning asset for her. So,
I mean,
Yeah, but I can't even afford any payments at this point. It's very hard for me to make payments.
well,
So even if I do a loan model, I will still struggle somehow. I won't be able to pay.
okay. Well, we would recommend a short
sounds
sale.
like a short sale. Then,
Frank,
yeah.
why don't you give your number out just so that everyone gets it?
It's 81. My direct mobile number is 818-968-5361.
We definitely recommend a short sale, and if you give Frank a call after hours, I'm sure he can look into it for you. Thank you so much for calling.
Okay.
We appreciate
Thank you
it.
so much.
Thank you.
Bye-bye.
Okay, so that was about short sales. Yeah, a very important topic, and I know there are people still underwater. We're going to go to our last topic today. Frank, I'm sorry I couldn't get to all your questions. There are
That's
others.
all right.
Is there anything else you wanted to add?
No, I think we
No.
covered it.
Okay.
Yeah.
Okay. The last thing I want to talk to people about is credit card debt and student loan debt. I'm going to get into student loan debt more on another show because the student loan debt in this country is out of this world. It's just horrible. We are able to work on student loan debt if it's a government-backed student loan, okay? Otherwise, it's private loans. It's almost impossible. You can't even bankrupt the student debt. And I know a lot of people don't want to go bankrupt. That the last thing you want to do is get out of college and go bankrupt. You know, there are people $250,000 in debt, and they're out of college. Like, you know, the idea is if you're a doctor, you're all that in debt. The first person who comes in your office, you recommend surgery. That's the most expensive
That's why I became
thing
a
you can get.
real estate agent. I didn't have to get any loans.
Exactly. A good move.
Yeah.
So there's a thing called healthy and unhealthy uses of credit. To understand this, let's go into the history of credit. I know we don't have a lot of time, but the history is when you were, years ago, you owned a farm, you'd go to your banker. You'd say, listen, I need a lot of money back then, $5,000 for my crops. And they would take a lien on your farm, and you'd get the money from your banker. And you probably knew the guy, and he knew you. And that's how loans were done. They were fully collateralized. In the real old days, back in 2,000 years ago, you'd might take it on your herd of sheep. You might borrow a few shekels against that. But credit was only used in a collateralized basis against land, against crops. And even, I remember in my father's generation, they'd go to the bank and they knew the banker. They knew what business they had. Today, nothing is personal. It's all an impersonal. It's impersonal. And that's why the system that's evolved deals with FICO, which we'll go into another time. It was only the late 60s and early 70s that the first credit cards emerged. Before that, there was just layaway plans. And I think this whole generation doesn't understand that there was no such thing as a credit card. The first ones were Diners, then Visa came out with a few, but it was very hard to know who was creditworthy. How do you know if someone can pay you back? Even these FICO scores didn't barely exist. So a lot of times if you were a homeowner, you could get a credit card. If you had certain employment, you can get a credit card. But it wasn't so prevalent. And then in the late 70s, they decided on doing numbers. Let's just get our numbers up. They figured a percentage of people are going to pay. So they would have you put down your income, and you'd put down a few things, and if things looked right and you had a Sears card, you'd get a credit card. And I remember when I got my first credit card and I went to the Playboy Club. Back then it was a big deal. I took my date and I think I spent $150. And I thought, that's on credit. Who cares, right? And $150 was a lot of money then. Even now, I think it's something for dinner.
Yeah.
But at that point, it was a lot. And then I realized, no, I got to pay this back, But I have to tell you, today, my daughter, she went to college, they gave her a credit card. She went over the limit, they increased her limit. She went over the limit, they increased her limit again. It was 0 interest the first year, now it's 20%. She's in nursing school. She doesn't make any money, so it falls on daddy to take care of her debts. And I don't like it, okay? And I don't know that many parents like this kind of thing. And I really urge the listeners to try to teach some financial literacy to your children. Credit cards should be used when you need something, not when you want it. They even sent her a Victoria's Secret credit card. I'm like, I don't think you need that, right? You may want it, but wait till you're a nurse and you can afford it. But they're not waiting. They're sending out cards. You get one card. She gets solicitations for City Gold. I mean, the girl makes no money, So they figured we're going to do this in vast numbers. The numbers are so great that it's like over $1.5 trillion Americans are in debt. Now, people are paying it, so to speak, now because the economy's pretty good. Wait for the first dip. And usually that'll come next January after people spend all this money on the holidays. And there it goes. Now you have a bunch of credit cards, 20, 30, 40,000. And if you look at your credit cards, it says if you pay the minimum, you can pay this off in like 31 years or 36 years. So I'm not going to be here, so, I don't care. But I'm just saying, you're never going to pay this card off. Thankfully, we can help with those things because it's a service that we offer. I guess our time is running short right now. And I just want to say we can get credit cards down to 0 interest. I'm going to go into them a lot more on our next show. But for right now, I want to thank Frank for being on the show.
Thank you for having me.
Because, it's been a pleasure. We want to wrap it up tonight by saying thank you to all our listeners out there who are live and those who are listening later when the World Series is over. We're going to go watch it right after this, Frank. Hope the Dodgers win.
Go Dodgers.
No offense, okay? We appreciate you spending whatever time you did with us tonight. And to all our callers out there, thank you again for sharing your stories and getting angry with us. Next Wednesday, November 8th, we will continue with topics of credit card problems. We're also going to start delving back into DWP and the issues around that. And the crazy rates that are being charged by utilities. I wanted to bring up the gas tax. I don't have time. If everyone noticed, your gas went up 12 cents a gallon today. Thank you, Jerry Brown. And so it's true. As a special promotion for our UBN listeners, FSN is offering a free credit analysis. Send us a text to 310-384-4352. Just put FSN on UBN free credit analysis, and we'll get back to you. We'll do this for free. Additionally, FSN offers other services like credit repair, credit card consolidation, interest rate negotiations, credit card reductions, interest and amount, mortgage rate reductions, and medical debt negotiations. We haven't gotten into that. These are some of the many services we offer to help you have some financial sanity in your life. And check us out at www.financialsanitynow.com. We also work with Frank on his short sales. If we can't take care of it, he's our man to go to. Check us out on Yelp by looking up Financial Sanity Now, or call FSN anytime at 818-906-2385. Remember, America, to keep calling in with your stories. Remember, we're here to help. But most of all, remember, we're not going to take it anymore.